The Autograph Beach View by Cedarwood, located in the serene Elekon Magbon area, just a 5-minute drive from the Lekki Free Trade Zone and around the Dangote refinery.
Just imagine living in a place where the ocean breeze and the tranquil beach view is a part of your everyday life.
And all this can be yours for just 25 million naira only. Do not miss out on this incredible opportunity of owning a beachfront property at one of Lagos' most sought-after locations. The estate is currently selling at an early bird price of 25 million naira only, with an initial deposit of 10 million at a 3-month payment plan.
What more can pass a better title? With C of O in view, you can be rest assured that you are investing in property with legal security and long-term value. Subscribe to Autograph Beach View by Cedarwood Estate today and enjoy. Thank you.
All plots are already fully demarcated. Once you make your payment, you can select your plot and get allocated instantly. What are you waiting for? Come now and choose your plots.
Join our free site inspection from Monday to Saturday from 10 a.m. to 5 p.m. Subscribe to Autograph Beach View by Cedarwood. Bye.
This is Cedarwood Luxury Radio, Nigeria's first real estate radio.
The idea of owning a home should be beyond having a roof over one's head. That's merely survivance. Featuring a collection of service plots and unique home units, construction and design options at Elegant Havana by Cedarwood blend contemporary home and estate innovations with Victorian detailing, inspiring nostalgia whilst addressing contemporary housing options. This is Elegant Havana by Cedarwood.
Elegant Havana by Cedarwood is offering service plot 0 to 3 months outright plan, actual price 45 million, early bird price 40 million, initial payment 10 million, 3 to 6 months installmental plan, actual price 51 million 750,000, initial payment 10 million.
Estate features includes wide, rigid road network, CCTV periodic drone surveillance, fitness center and spa, automated gates, underground drainage system, convenience store, QR code visitor access, water treatment plant and plot-by-plot water connection, estate management office.
Subscribe to Elegant Havana by Cedarwood today.
This is Cedarwood Luxury Radio, Nigeria's first real estate radio.
Hello everyone, my name is David, Programs and Broadcast Coordinator for Cedarwood Luxury Online Radio. Would you love to feature on any of the Cedarwood Luxury Online Radio program? Do well to reach out to us via the number right there on the screen, irrespective of who you are, what you are, where you are, and what you do. The Cedarwood Luxury Online platform is available and open to every one of you out there. So if you love to feature on any of our Cedarwood Luxury online radio programs, do well to reach out to us via the WhatsApp number right there on the screen, and boom, you'll be in the studio to speak with us. Do well to reach out to us now.
Hello everybody, this is Vivian Imako, the ED, P1 Perfection Business Investments Limited, and you're listening to Cedarwood Luxury Radio. Keep it locked. God bless you.
Hello viewers, I am Ambassador Dr. Julius Oyedemi, your most astounding CEO 2023 P1 Group. The best radio to listen to is no other than Cedarwood Luxury Radio. Thank you.
There are two kinds of people: those who love to own property and the smart investors. Life benefits of subscribing to your property off plan. I'm Sandra Telefe. Speaking of which, here at P1 Plus, we offer exotic buildings at exotic locations off plan. Here are the 5 benefits of subscribing to your property off plan. 1. Lower prices and exclusive discounts. Off plan properties are often sold at lower prices compared to the completed units. 2. Potential for high returns. As the property appreciates in value during construction, buyers can benefit from significant capital gain. 3. Flexible payment plan. Many developers provide structured payment options, making it easier for you to avoid the large upfront costs. 4. Customization. You can enjoy the benefits of customizing your property to your desired taste during construction. And 5. The ease of reselling your property. You can easily resell your properties during or after construction, which means more money in the bag. Smart investors find creative ways to save money, get return on their investment, and enjoy flexible payment plans. I mentioned the exotic locations earlier. Exactly. You can get a home in a beautiful estate, just like the Cedarwood Luxury Apartments and Terraces. Imagine living in a life-size version of this estate just by subscribing to our autographed maisonette and apartment by Cedarwood, Monastery Road, Shongotedo. That's not all. You can enjoy living in a serene environment with quality and comfort. Be a smart investor today and subscribe to our offline property at the autographed maisonette and apartment by Cedarwood, Monastery Road.
Hello listeners, you're here with your global multiple award-winning real estate celebrity, Honorable Dr. Balaji Osage Onolaja, PhD, FIPA, Nigerian Youth Role Model, MD, CEO, P1 Atlantic Property Network Limited. Keep listening to Cedarwood Luxury Radio.
This is Cedarwood Luxury Radio, Nigeria's first real estate radio.
Looking for a studio to run online radio shows, podcast series, record jingles? The Cedarwood Luxury Studio is highly equipped and available to give you the very best of studio experience.
Hello everyone, my name is Dr. Michael Ahwetie. I'm the Managing Director of P1 Pro, and I want to encourage you to subscribe to Cedarwood Radio.
Good afternoon, Lagos, and welcome to your one and only Cedarwood Luxury Online Radio. So this morning on the real estate market trend, so we're gonna be playing a video for us, and the video is from Ken Mark Elroy. Mark Elroy is one of the top motivational speakers about. He's into real estate. He has been into real estate for decades, for years. So he's just going to be sharing with us
And this topic is saying how to predict where your real estate market will be in the next 12 months. So I just want you to relax, sit back, and enjoy these wonderful teachings.
In 1989, I was in the multifamily business, and I started in this business in property management. And I, of course, didn't know anything about it. I was trying to learn fresh out of school. I was managing this property in Eastern Washington in West Richland, and it was about a 200-unit apartment complex. At the same time, the town was also bustling due to the Hanford nuclear plant. And I'm managing this property, and I'm thinking, I'm doing a good job. It's highly occupied. It's running great, cash flow, the owners are happy. And then it was decommissioned. 12,000 jobs gone. So I ask you, what is the main driver of housing across all markets? People. Now, this is from years and years and years and years of getting it wrong. So back in the 50s, you guys probably remember, Detroit had, I think it was 1.8 million people. It's the fifth largest city in the 50s in the entire country. Now, we all know what happened to Detroit, and I'm not going to go down that road, but right now there's about 650,000. So there's a 1.2 million loss. And it should probably not surprise you that there was a time when you can buy houses there for $100. And it was going that way all the way through 2012. This is 50 years later. So it's really important to understand when you guys are looking at where you want to be, that real estate, all real estate, doesn't actually even work unless there's people. Now, there are other factors. Interest rates, leverage, there's all kinds of things that go into this. But at the end of the day, if there's no one that can actually pay you rent or buy something, it doesn't really matter. So when we are always looking at markets, we always look to where people are going. And this is a really important factor. So I wanted to start with that because in all the years of my property management, even the properties that are poorly run, if the market was hot and people were coming in, the occupancy was always high. You guys have seen it. Service goes down when business is easy. And it becomes really difficult. And that's actually where we're heading now. And I'm going to show you guys. So what I'm going to do today is I'm going to walk you through some of the migration patterns, some of the areas that we're looking in. We own just around about $2 billion in assets. I bought close to over $3. I have about 300 employees. All I do now full time is look for deals. So we'll go to the first one. I think this is a really important thing to focus on. And that is, if you look from the population up in the upper left-hand corner there, now that is through May, but the projection is actually 341 million. Now, that's not household growth. That's just people born. This is the supply. When you turn 18, generally, not always, it's changed a little now, you get out of the house and you go into a rental. 18 is my demographic. 18 to about 25 to 30 is my demographic. When I'm buying apartments, I'm looking at people that were born in the late and mid and the early 90s, all the way through the 2000s. That's my demographic. Now, if you're a home builder, again, just going off of history and statistics, you start to buy homes at about 30. Actually, it's 35 is the kind of the average. Now, that's obviously being disrupted at the moment too. But if you look at year-over-year averages, that's what it is. So this is births minus deaths, okay? For those of you that are studying trends or demographics, this is a very important thing. And so I'm going to just stay here for a second. Take a look. Obviously, you can see what was going on with COVID there. And that's what that is. They say that there's going to be close to 373 million people in 2053. If I was just to look at this chart and make some real estate predictions, what is that? That's actually negative. What that shows at this point, this inflection point in 2040 down to 2005, it's actually going the other way. That's an important thing to understand. So as a real estate guy, this is this morning as I was putting this slide together, it's like, what does that tell me? Well, it tells me I should probably start looking to buy cemeteries It's real estate. But this is how I look at stuff. It doesn't have to be cemeteries, but it could be funeral homes. It could be anything that services that. At some point, when you're right on top of it, it's going to seem so obvious. You can see that this is going to decline. What I really wanted to talk about, though, for this talk was this net migration number. I'm guessing this is documented. The reason I brought it up is because a lot of people don't really look at this sector as a demand on stuff, and it's putting pressure on real estate, period. It's also putting pressure on the school system, in some cases, the restaurants, the health system. They're filling up micro hotels and they're filling up, apartments, and they're creating occupancy. That's a fact. That's what's happening. But I think this is important to understand because everything I'm going to talk about from this point is based on where we're going. See, when I'm investing in real estate, even if I buy incorrectly or poorly, the one thing that can save me is the amount of people trying to get there.
We have some positive updates on the Alta Nevada deal, and we're here to talk to Charlie about them.
So super excited. We wrapped up the due diligence phase, which is kind of where you dig in and find everything that you need to find, the skeletons, and there's none. This is an opportunity to buy something that groups like us don't normally get to buy. This is usually swallowed up by the big, huge, sophisticated groups out of New York. And this is an opportunity that you don't have to be in a REIT. You get to see exactly the deal you want, but you're buying a REIT quality asset. It's just, again, I'm crazy excited about this.
Yeah, I mean, we're going to be buying this deal below market. Rates have gone down. Our loan to values in the 50s. Yeah. We're going to put a lot of equity down, which means there's a fair amount of cash flow with that. Plus, there's a nice value add component down the road, because if we ever want to lever this up, we can do a cash out refi. Anybody who's interested, go to mccompanies/new deal. Take a look at it, and we're going to close it in a month. So I hope to see you in the deal.
So let's go to the next one. So now, this is the only, I actually looked at a few things, but this is the only one I could find. This puts pressure on housing. So when you start to take a look at New York or LA or some of the areas in Texas and Florida, a lot of the reasons that these markets haven't seen free fall, and from the stuff I'm reading, and I'm dialed into all this stuff, is people. But this is an important thing to watch, you guys, as you're moving through, as you're making some of your decisions, but based on whatever it is, it's an important thing to watch. This is right off the census, and each dot represents 100 people. So the red means out, the blue means in. So when I'm trying to invest money, there's a reason why real estate prices are adjusting down. There's a reason why there's concessions. There's a reason why rents are going down. And it's precisely because that's where the people are going, period. They're just leaving. But they're going somewhere else. So there's a whole bunch of data that you can pull on your own. One of them is just out-of-state driver's licenses. If you move from Seattle to Phoenix, trade in and say I'm now a resident of Arizona, and you get an Arizona license, that's one statistic, very easy to find online. The other one, U-Haul, if somebody moves from Phoenix to Texas, let's say Dallas, that's a data point. One way. U-Haul, Ryder Truck, North American Van Lines, it's all online. They publish this stuff online. You can actually Google right now, North American Van Lines, where did everyone move in 2023, and it'll show you. And as you start to make decisions on single family, retail, industrial, multifamily, malls, whatever it is, you'll see that people matter. They matter a lot. If you're buying medical office, it matters. If you're buying multifamily, it matters. So it just matters. And then, of course, you can dig in even deeper into the affordability and all the other things. But what I really want to talk to you about is this. So, again, we're going to start at 2006. Look at the number of housing. These are the units started, total units, in 2006. So Clinton and Bush said everyone needs to own a home. Okay, what does that do? That hurts rental housing. We're going to figure out a way, all the people that are renting, that want to buy a home, they can buy a home. Not going to go into all the policies and all the reasons or anything like that. I'm just going to say that's what happened. So you can see that's what got us to this point. All right. Now, developers, investors, everybody loaded on, and that's what happened. Then, of course, boom. Nobody really talks about this period. So I love this period because this is when everything reset. This is when prices dropped. This is when rents went down. And this was a chaotic time. And it wasn't very long. Like it was 2006 to 2010, let's say to 12. when it started at the bottom. So that's not very long if you look at the time frame of how long it took to go up. The most important thing is that this gap right here created this. Now, there's all kinds of data on this. Now, this is right off of, I think this was Fannie Mae, that said that we are now 1.5 million units short, right? And this is a result of this. Okay, now I just went over population growth. That has a lot to do with supply, right? This is supply, and that was supply of people, and this is supply of units. And they actually need to be pretty close. Household formations, as people move out, a roommate splits, and that's considered a household formations. These are all important things to watch. What I really want to point out, the economy was in bad shape. The banks were taking on water. The homeowners were losing their houses. Their loans were more than the house was worth. And so we called it jingle mail. They would just mail the keys back to the lender. And then what? Oh, then they move into rentals. So what happened was a massive shift from single-family ownership. They moved into the rental side. And, of course, not immediately. Everybody tried to hold on the best they could, but the equity was down, and some people held on. But at the end of the day, what we really had was banks weren't lending. They weren't lending for building significantly. So this 10-year period is actually what just caused this boom. There's a massive supply still at correction in about a 10-year window, because there was not a lot built, because they weren't giving anybody money to build, because they were still had toxic assets on their books. So these banks were in trouble during this time. I loaded up. I actually went up to Canada, put together a fund with RSP, or retirement savings plan money, $100 million tranches, and I started buying Texas real estate, multifamily. I own most of that still, because I'm a long-term hold guy. I like passive income. I don't like to flip. I don't like to, I'm like, it's hard enough to find a deal. The last thing I want to do is sell it. And I actually went through that exercise when I was a younger man. Then what happened is we started to get back up. And by the way, this is 1 million units here. And then the interest rates went up. So when interest rates went up, me and everyone else said, I am not going to build when construction interest rates are 8 or 9 or 10%. This just doesn't make any sense. Why would I do that? My land's the same. My building costs are higher too, but we won't go down that road right now. But the cost to build is 8, 9, 10% personal guarantee. I'm not going to do that. I'm just going to wait and see where this goes. I wasn't the only one who decided to do that. So what we have, the opportunity, is we have a massive fall off after the units are being delivered right now. So the units that are being delivered right now, that's the supply that started 1, 2, 3 years ago. So multifamily deal for me, I put the shovel in the dirt. It's an 18-month build, maybe 2 years build. That's how long it takes to build a big, 14, 15-acre project, 300-some units. That's how long. Then you have a lease-up period. It's not even stabilized until year 3 or 4. So these things have a significant lag. So anything that's being delivered right now that you guys drive by maybe, that started a while ago. And so that's why I like real estate. It's not very smart. It's just, just trudges along, and it's pretty easy to track. It's so what we have, the real opportunity is that these are the units that are actually going to move forward. Those are starts. Those aren't planned. Those aren't people that bought land. Those aren't people that have architectural drawings. These are people that actually put the shovel in the dirt. That's important to understand. Okay, so then the next chart is, of course, home ownership rate. Now, we were at 63%, again, going back to 69%, we're just going to call it. So when I look at a home ownership rate of 69%, I also look at a rental rate of 31%. So a lot of people just look at home ownership rate. I look at rental rate. Okay, rental ownership. So you're either in the way this measures it, you're either in one or the other. You're either a renter or you're a homeowner. So the homeowner went up all the way up to 69%. As you can see, it dropped significantly down here, and this created the problem. This is when everybody moved back over into the rental side, and it put all this pressure on rental rates, on pricing, and all that kind of stuff. So everybody thought they were so smart. I'm so smart. But really, what it was just to shift of people. And it was, again, back to people. So here's where I think we are. Residential, I think, is here. It's not even close to the top. The reason? No new construction. New construction, which is supply, typically tips something. Multifamily is somewhere about in here. We already went through the new construction phase. I would rather not buy the land and spend 3 years building a project and try to lease it up and have all that risk. I would rather just buy somebody else's that already been through that and just, boot their equity out and buy it for the construction loan. So that's what we're doing. These are some of the predictions that I have over the next 12. Trapped equity, refinances down, sales down, new construction down, cost to build up, all that stuff's going to continue. On the single family, with the banks, they're already pulled back. They've released a little bit more money down, which is not a problem. That it's nice to have leverage. There's a lot of countries there isn't any, so having leverage is fine if you're not going crazy and borrowing somebody's equity that's too much. Now the commercial side is going to be a problem. We are definitely got regional mall problems, office building problems, and there's a lot of multifamily problems. As I was telling everybody, not all debt is regulated. Some of it are debt funds. Like you guys could put together a debt fund and loan to people. So some of those debt funds are taking back assets, and they're taking them back, and everybody's wondering, where are they? Why aren't they hitting the market? Well, it's because if they sell it, they have to take the loss. So they're just asset managing properties right now and hoping that rates can go down a little bit. I've been in business for over 35 years, and I've just made the most comprehensive video that I've ever made on the most critical lessons that I've learned in my career. I highly recommend you check that out here.
A few years ago, this environment wasn't looking good and attractive. But with massive construction and infrastructural development, properties in this environment will gain significant value. Welcome to the Autograph Grand Deal by Cedarwood. The Autograph Grand Deal by Cedarwood gives you an opportunity to own a piece of Lagos. Why not key into the future today? For just 2.25 million naira, you have the opportunity to get a 300 square meter of the Autograph Grand Deal by Cedarwood.
As you can see, this is a total table dry land and it's a buy and build property. Get a solution form today and subscribe now.
Facing the Coastal Road, the Autograph Grand Deal comes with the land set to register survey and deed of assignment.
This is Cedarwood Luxury Radio.